Hey, what's going on, YouTube? Let's start off with the dollar. Here's the daily. You can see the recovery and the hit the 8, backed off, then it got stalled today. So still looks bearish. Look for previous these two bodies right here. Look for that to break down lower than those two bodies. This is an indecision, so a previous low break. You can ride that wick all the way down. Look for a previous low break here too. But it's trying to break in the previous lows and it keep knocking back. Already went up, stalled out, went up again today and stalled out. So if it does want to go up, look for these previous highs. First we got these previous highs, which is our EMA 8 and our 13, as always, the previous lows. That's it for the dollar. It's been kind of strange. I've been waiting for this thing to fall out of the map into no man's land. But it just keeps hanging in there. So it's bearish, as we talked many times. S&P, lo and behold, meeting of the minds, and get a little run out of this thing. A little Obama, Yellen, and Biden. Smartest people on the earth, right there. Making the move. So we got a lower high. But it wants to bounce. And hopefully make that. Shoot. Hang on. Here we go. So we missed the mark and broke down. Now it broke back up. Look for a break of 267. See if we can make our natural course and make a lower high. Or we can do as Dow did and whipsaw above the lower high and back in. But now we are looking at a whole different scenario. As it broke down, it broke above, broke down, and now it broke back in above lower highs. Just define all sorts of gravity here. This should have broke down a long time ago. This should have hit here and broke down. There's something weird about this. Definitely. This is a top pattern. Now all of a sudden it wants to break out and make higher highs somehow. 1800 is, or 18,000 is the break above. Look for a break on this double top. 17.8. This reminds me of hyperinflation. If it wants to keep going for no reason, it just means it's the dollar's becoming worthless. Don't know what to think other than that. If this thing wants to keep going, I mean, Austria did a 54% haircut, taking everyone's money, calling it a bail-in. Be careful out there. Don't keep your money in a savings account. The banks actually think it's their money. So what's going to happen next? I don't know. I mean, it's crazy. This thing is just naturally come down, make a correction like it should, and stop messing with it. These people think that they are all high and mighty and think they can control the natural course of things. We haven't looked at the NASDAQ for a very long time. Only reason is because there's like three issues that control like 3/4 of all NASDAQ. It's Google, Amazon, and Apple. I think, or is it just Apple and Google? They're like a third of all of NASDAQ net worth. Anyways, that's why I never look at it. But let's see here. Looks like we've got a run up. No corrections since '08. Well, I guess we had a minor correction here, but that was a long time ago. Looks like I get the same kind of pattern going on here as S&P and Dow, as it broke down and wants to climb back up. It wants to make a lower high. 8 crossed the 13, and now it's twisting back up. 8 is over the 13 now. And it looks like they're working off a double bottom. This is a huge top pattern, and you know what? I just don't get it why they just let these things fall apart as they should. Eventually they will, but the longer they wait, the worse it's going to be. I'm sure you all heard that before. Central planning is not working. Keynesianism is out. Printing money to prosperity is not working. Anyways, that's a top pattern. It looks bearish to me, but you know, what can I say? They're gonna let this thing run for 6 more months before the election or whatnot. Here's crude. Crude took another jump today, I believe, $1.50 or so. There you go. Nice. Did exactly what it was supposed to do. Broke over the 34, came back to the 8, broke back above the 34. Watch the break up above 42. 42 will get you. Now we got to break into these previous lows here. So 42 break will get to 45. And 45 will get you 50. So we'll see what happens. But it's above the trend. Watch the 8 cross the 34 and price come down to meet. So watch for the bullish retracement. That would be your best buy if you don't buy the break. If you don't buy the break, wait for the bullish retracement. On to the good stuff. Gold. It's kind of sideways, kind of lagging today. I think it's waiting for silver now. It doesn't want to break out until silver breaks. So here's daily, 5-hour. You get a hanging man here. Not a true hanging man, but it's similar. Long wick, small body, but the wick above is not supposed to be there. So it didn't turn out to be a true hanging man there on the 5-hour. But right now, as we sit, we're above the it's coming down to the 13 as we're playing games here. Looking for a bounce. Looking for a bounce. How's that? A bounce right here. 50% of that candle, which would be nice. Maybe a little small wick to show it's ended. The small wick going into previous highs, and then breaking back above. Maybe we can get a reversal bar out of that. But that's 5-hour. Daily, obviously, it's doing a bullish retracement as it crossed the 34. Weekly, It Wednesday tomorrow. A few more days of trading. We need to close on a weekly above our previous high. Definitely above our 8. If we can get above 1260 on a close on a weekly, we're good. We're good. So let's build to that. Silver, on the other hand, was awesome today. I was going to record the whole session, but I wish I had a better computer to do that. Pretty cool. Here, let's go to the short term. 15 minutes. I did a little video earlier today. I wanted everyone to notice that hammer on a 15-minute closed way above, and then the price came out the next candle, opened down onto support, and had a trading range between the 8 and 13. And then next candle, boom, boom, made a higher or a lower high. So then we're in a pattern, which we don't need to use this. We can use our 34 as our trend. So I made a lower high. So now we have an opposing point, and then it came down the next round, bounced off that 13 again, came all the way back up, followed the 8, crossing the 8, came up all the way, made a double top, came back to that 13 again, made a lower high, and then we closed the day. Look at this channel. Let's do this. Look at this channel. Well, not much of a channel, but look at the pattern forming as we got lower highs and a pinch. We got a pinch going. As soon as it went sideways, you get opposing points. Boom, 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 bouncing in between. It's going to really wind up on this one. Boom. This should all happen tonight when no one's watching. So, anyways, let's take these out. We got a weekly chart. And I had a question on windows, which I call them gaps. So, when you said windows, I was like, what are you talking about, man? Windows? You want me to look at Microsoft? I don't know what's going on. So anyways, we'll get to the gaps. We got higher highs. Lower highs. Pretty nice. I mean, the 8 and the 13 above the 34 for this amount of time hasn't happened for a very long time. And the last time it happened was in 2012, which was a correction. It was a bearish retracement. So this is totally different. I'm curious to know if everyone is in on this bullish market. I hear a lot of people that's wishy-washy. They're watching the 50 moving average, the 100-day, the 200-day, and they can't find this answer. Well, the answer is you're using the wrong trend. The weekly trend is the 34 simple moving average. You pop above it, bullish retracement, you consolidate above it, and then you move higher. Happens all the time. It's easy. 3 lines and some candlesticks right over the 34. This one is taking a lot longer than usual, but nonetheless, it's going to break out. Can these break down and fail? Yes, they can, but not with higher highs and lower highs, or higher lows. Getting confused. Anyways, It's going to break out. We did move below our previous high, but as we looked on the 15-minute chart, it's just in that tight trading range. It's going to pop again. Probably going to do it tonight. It's not going to stay in that range all night. You know what I mean? It's ready to go. As I mentioned before, look at the even spots on the chart. Look for 17s and 18s. We need to get to that 1850 to really do some damage on the monthly chart. So we're changing trend on the weekly, but the monthly chart, remember all the work we had to do? Here it comes. It's all paying off. Look at the higher lows. All the way up. It's above the 13 and the 8. Watch that 8 cross as price moves above 18. It's going to be a sweet move. I think it's ready. It's just going to pop and just right over 18. It's going to be crazy. Makes you want to be a trader right now. Anyways, silver is awesome. Silver is going to catch up the gold and maybe straighten some of this ratio out. Like it's, what is it, 80 to 1 ounce of gold, 80 ounces of silver to 1 ounce of gold. That's absolutely crazy. The bankers are going to lose control of this silver here real shortly. Let's see it. Copper. We haven't looked at copper for a while. But here's a weekly chart. We had this mini reverse head and shoulders popped. Now at a higher low, crossing above the 13, and the 8 is crossing over the 34. So even though this went way below, the 8 is still moving up. We're going to get above the 8, and then we're going to be in a bullish trend on copper. Look for previous high breaks. You can even use EMA 8 as a previous resistance. Get above that and just take a ride. Or if you got some guts, you just take this previous high break here, which is a meeting line. There's also a lot of resistance and support at meeting lines. So, and you got a meeting line right over here too. Huge meeting line. So now it moved back above. Watch it come above the EMA 8, take a ride. And then if you can't catch that, watch the previous high break at 230. Take a ride. Where's it going to go? We got 240. 240, it's going to ride this candle up to the body. It's 250. 240 to 250. Right here and right here. Copper looks good. I got a lot of copper pennies. That's why I like copper. Every time I found 2 copper pennies in my change today. Just buying regular stuff. Copper pennies are 82 and older. I see copper in my penny jar. I put them aside. Those are going to be worth some money one day when all this fiat crap goes worthless. GDX. Here's some gaps. These are gaps and runs. Gap and runs. Gap and run. Extensions. Gaps can be used as support and resistance. Basically support and resistance lines, and it just takes a jump to the next resistance and support lines. That's basically what it is. Gaps don't always have to fill, but they usually fill, and they don't have to usually fill right away either. Years later, they can fill a gap. It's crazy. So these gaps may not be filled for years. These are powerful upward moves, and they don't necessarily have to be filled right away. So on the other hand, where was it? Today on MUX, it filled the gap. It filled the gap and went all the way back up. So MUX. So always and never use those terms on gaps. Sometimes they do, sometimes they don't. Usually they always do, but they don't always have to. I don't know if I'm making any sense, but they're just support and resistance lines. You can trade them as such. If you trade above the gap, use that as your support. If you trade into a gap, then you're trading into resistance. For instance, on this one, as it came down, it's probable that it just wanted to fill the gap, and it did. It came into support and rode all the way back up. But as you ride the bar all the way back up, you're running into resistance. So you rode it down, broke support, which now is resistance, came into support on the other side of the gap, and then you had to go through the other end. So it's a wild ride, no doubt. And another example, the one I traded the other day. This one, on the other hand, gapped and ran, and then came all the way back down, all in a few moments in the morning, Monday morning. But see, I don't usually look on the daily to try to find my trades. I'm looking at the weekly, and I'm looking where major support and resistance lines are, so I can buy into support and sell into resistance. So what did I do? I watched this thing as it broke all the way up on Monday morning, came all the way back down into support on a weekly support line, and I just held my own, and I bought into support using that faith of, going against all odds, which a bullish retracement is the safest buy-in. So you have to condition yourself, I guess. So again, on a daily, this Avino, I bought this on Monday morning, ASM. It gapped. There's no way I'm chasing it, right? There's no way chasing it. So it went all the way up on Monday morning, and then it came all the way back down to support, and that's where I bought. It didn't go any lower than that all Monday, and then come Tuesday, it opened here and went all the way back up, riding this wick all the way back up. So here's the thing. I don't think this gap is going to be filled for a very long time, because it gapped up into support, it consolidated for a full day, and then moved forward, gap and run. That took a lot longer than I thought it would, but still. So on this one, you had a gap one day, and then the next day it came all the way back down. Now, can this happen on this? Well, I don't think it's going to go down further than my support. See, this is a weekly breakout. I mean, this is right over the trend break. Came up, bullish retrace, and now it's popping. Where on MUX, this thing's been running for a while. It's nowhere near the weekly trend. The weekly trend was way down here. So you see the difference? It's got to trade them a little differently. Obviously, gaps up here are exhaustion moves, and then filling the gap, you have to be careful that it doesn't fall through. On this one, the other hand, it is just changing trend and it's breaking previous. It's a previous high break gap. So it gapped above the previous high, came all the way back down to previous high into support, bullish retracement, bam, I bought it. And then luckily enough, I rode that candle all the way back up. Hopefully next couple of weeks, just to mention, I hope that I can get to, I want to get to this previous high here, 160. Seems fair enough. I do have to break into these previous lows here, 130, 150. I want to get to 160 though. And then if you look on Avino's monthly, what I like about it is this multi-year double bottom. Boom. I'm guessing this is going to come back to its natural point eventually. Right now I'm just holding it for a couple weeks to accumulate some shares. But I imagine it's going to come back up to here through time. So there you go. Those are two different gaps there. You mentioned you want to know about SLV gaps. Look at that mess. I mean, there's no way that I'm going to sit around and try to figure out where the money is going to move. Obviously, when it broke the previous highs on the gap and run 2 days in a row, obviously you're in, right? That's easy enough. But what are you doing in here? I mean, what the heck? Trying to figure out what the hell is going on in there? That's crazy. There's no way I would mess with that. On the other hand, wow, that looks like an easy trade, right? The reverse head and shoulders, boom, pulls back. You got a higher low, break the previous high, boom. Never mind all the gaps in the middle. Just take the previous high break and take it for a ride. If you miss that, then you take the previous high break on this double top right here. And then now all you have to worry about is blue skies breaking this high, which is 1550 to get blue skies. SLV, yep, there's 18 again. 1550 will get you 18. Sounds like a prison term. So there you go. I mean, why would you? I mean, there's no way I would try to figure that out. I would be wrong 80% of the time. Here's some gaps on a 60-minute. Okay, gap down, bearish retracement, blah 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 blah. Next morning, boom, consolidated, tried to break, failed, came all the way back up, and then all the way back down. See, I don't know, there's no way. And besides, this is all happening like middle of the night, I bet. Yeah, it's just too hard. There's no way. Day trading's for fools. You got to take the long-term trend and ride it. There's no way to figure out that mess. But I'm glad you're making money. Let's look at a monthly. Yeah, see, that's much nicer to look at. There's no mass. We're looking at 18. Got to break previous lows. Previous low is 16.5. There's a meeting line at 15. I think you got blue skies coming up. Blue skies. We got a flat top break on a monthly chart. You can see that right there. 1542. It's gonna keep going. First Majestic as well. This did kind of a stair step, kind of that stair step angle, and then just decided it's had enough, made some higher lows, gapped, came up, broke previous high, gapped, and rode. Gap and run right there. That's a daily. See if we can find some bigger gaps. So you had a gap, gap. It seems pretty straightforward, but just like this, the same thing before. There's an MUX consolidation, but just like before, I mean, this thing has been running for a while, so there's different gaps. The gap that I bought on ASM was on a weekly chart, broke above previous high, bullish retrace down to the previous high, and I bought into support. Where these are gapping and running, gapping and running. Use gaps as support and resistance line. So if you decide to buy into the gap, make sure that you stay above the gap. If you fall back into the gap, then you know it's going to it's not a gap and run, so you know you should just get out and wait for the gap to fill. Either wait for the gap to fill and buy into support on the other side of the gap, but then again, don't buy in too quickly because it might just fall past the gap and then make this a extension, an exhaustion move. So I don't know any other way to explain it other than those terms. There's a couple good books out there. I think it's called years ago. I think it's called Runaway Trading, something like that. I'll have to look it up and I'll post it on your comment. Just a couple more here. Running late. Sorry. Lot to look at though. Lots to look at. I had to leave some out and then don't have time, you know. Nugget still looks awesome. I don't know what this thing is gonna go to the moon. I mean, I got previous high over here at 271, 95. Got to get above 95 and 100. I think we talked about. Yeah, get above 100, and then 50% of this red candle, which is 130. 130 to get you 200. That is crazy. You got 165, 130, 165, and then 200. And then it's off to the races. That's 300. That's crazy. Nugget's awesome. I wish I had some pretty pennies to put in that one. Finally, someone said that they sold USLV too early. Blah blah blah. No, you could have took another, a couple more days and made some profits. But once it breaks the previous high break, you're looking at 32, which is a double on this USLV. USLV is just now breaking previous highs, making a flat top break. Perfect time to buy. Perfect time. And silver is going to be breaking out. So make sure silver's breaking out with you. But take this to the previous high, 1650, which is also the previous lows. And so you got good $2 on the pop initially, but I think it'll go to at least 19 or 20. Here's a gap in here. Yep. I think it'll go to 20. I really like that chart. I mean, gets up, accumulates, pops above, retraces, pops above, retraces. Now it's ready. Boom. You can take the low of this pattern, 985. Let's call it 10, $5. So 15 will get you 20. Another present term. There you go. Just guesstimating, but 950 to 1482, about $5. You take the break, you add $5, get you 20. There you go. That's it, guys. I hope I answered your gap questions. Support resistance lines. Use the gaps as they either run or fill. They don't always have to fill, but most of the time they do. Especially years later. Sometimes they do. Years later, they'll fill the gap. But these stocks are so bullish, it might take 10 years before they're filled. So there you go. Thanks for commenting. Really appreciate that comment I got today. Yeah, I wish I had more subscribers. No doubt. But if you guys want to donate, don't forget my donation button. I do need a lot of coffee. And get yourself a Bitgold coin. Bitgold account, excuse me. I mean, Austria just did a haircut, a bail-in of 54% of everybody's money disappeared overnight. I don't know what to tell you guys. I mean, if your money's in a bank account somewhere and there's a bail-in, it's going to be wiped clean. This funny money that I'm using for trading is one thing, but I do have my stacks of silver. I have a Bitgold account, and I have a bunch of copper, nickel, and some gold francs. So I mean, I'm just using funny money to trade, see if I can make any more out of thin air, as they say. So far so good, guys. I mean, I'm up, and it's been kind of slow for me, but my account is building. I've accumulated 3 stocks so far, and I hope these videos are helpful, because I mean, I tried initially just trying to show everybody how easy it is to use long-term charts. A couple lines. The 34 is my trend. I use previous highs and lows as my 8 and 13 as support and resistance lines, and I trade with 3 lines. I don't use any indicators. I wait for the price to pop above the 34, bullish retrace, and then I catch the flat top breaks. That's it. That's all I'm doing. You can do this kind of thing all day long on any time frame. Seriously. But your best trade is the weekly chart. Wait for that trend to change, and then you can ride the swing trade for months or years. Sometimes a few weeks, but I don't believe on this silver gold trade it's going to last a few weeks. This is going to be awesome. We're going to make some money. I'm going to accumulate every mining stock I can get my hands on. So there you go. Lots to look forward to. See you guys.